The Chinese yuan has moved ahead of the euro, now ranking as the world's second most used currency for swift trade settlements, with a 5.8% share in international payments as of September 2023. This development showcases China's rising economic influence and its efforts to make its currency more global, partly through the BRICS group. This move underlines the increasing importance of the yuan in worldwide trade and finance, marking China's economic progression beyond Europe. We start by examining why the yuan is advancing against the euro. The rise is driven by more international borrowing in yuan due to its lower interest rates, increasing its use in global finance, especially through yuan-denominated bonds and loans. The growing issuance of panda and dim sum bonds, reaching record levels, has made the yuan more prominent in trade finance, recently surpassing the euro. However, for the yuan to become a global reserve currency, more is needed than just a larger role in trade finance. Challenges include limited international use and circulation of yuan bond proceeds, and its primary use within specific bilateral, rather than global, channels. The yuan's global use mainly involves China-friendly countries, or those in the Belt and Road Initiative and BRICS. The Belt and Road Initiative, BRI, promotes the globalization of the Chinese yuan by encouraging its use in financing and trade among participating countries. By investing in infrastructure and development projects across Asia, Africa, and Europe, China fosters increased economic ties and yuan-denominated transactions. This initiative not only expands China's influence, but also boosts the international profile of the yuan, positioning it as a viable alternative to dominant global currencies like the US dollar in international trade and finance. Trading with local currencies among BRICS members can significantly promote the wider use and globalization of the yuan. This approach reduces reliance on dominant global currencies like the US dollar, thereby lowering transaction costs and exchange rate risks. Such trade agreements foster closer financial cooperation and enhance the international liquidity of the yuan. As more countries engage in yuan-denominated transactions, it boosts the currency's global profile, potentially making it a more attractive option for international trade and investment outside the BRICS bloc. Additionally, China's launch of yuan oil futures within BRICS aims to challenge the US dollar's dominance in global oil trade, making the yuan an attractive alternative for oil transactions and convertibility into gold. China's plan to use its currency for buying oil from major oil producers, all BRICS members, is a strategic move towards de-dollarization in global oil trade. By promoting yuan-denominated oil transactions, China not only enhances the international stature of its currency, but also strengthens financial ties within BRICS. This approach could lead to an increased use of the yuan globally, as it becomes more embedded in the critical energy sector, potentially shifting the dynamics of international trade and currency markets. A mathematical model exploring trade currency preferences suggests a shift towards using the Chinese yuan over the US dollar, indicating a structural advantage for countries, including BRICS members, to trade in currencies other than the USD. This model highlights a growing willingness among nations to diversify away from the dollar, potentially benefiting the yuan as BRICS nations strengthen their trade and financial cooperation. Looking ahead, the future of the yuan and euro involves considering geopolitical and economic factors. The yuan's trajectory will be influenced by China's economic policies and its relations with the US and Europe. US elections could affect US-China relations, impacting trade policies and the yuan's stability. The euro is navigating a complex landscape in 2024, marked by several political and economic challenges that could influence its future stability and role in the global financial system. The political arena in Eurozone countries is bustling with significant elections, which could introduce shifts in policies affecting the euro. Moreover, the Eurozone must tackle challenges from global conflicts, fiscal tightening, and environmental transition initiatives. Economic trials, especially with Germany's fiscal policies and the European Central Bank's monetary stance, add layers of uncertainty. These factors combined paint a picture of a pivotal moment for the euro, with its trajectory heavily dependent on how these challenges are addressed. The development of digital currencies, like China's digital yuan and Europe's plans for a digital euro, could significantly impact both currencies' future. China's digital yuan transactions have soared, showing its potential for international use. Europe's preparation for a digital euro aims to modernize its financial system, potentially transforming the financial landscape. In conclusion, the rise of the Chinese yuan over the euro in international trade settlements marks a significant moment in global finance, reflecting China's growing economic clout and the dynamic nature of global currency competition. To support our channel, please like the video. Thank you for watching.